Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Peter Brodsky, co-founder and CEO of Hyperscience, to discuss information automation and how it's already made great strides in helping companies use their time better. Peter, it's great to meet with you. Welcome to Trade Talks.
Thanks, Jill.
Hyperscience sounds like things move really fast at the company. Tell us more about it.
We've had a really great year. We've grown about 300% year over year. We have more customers than ever, and most of our customers have come back for seconds, if not thirds. So things are going really well here.
What can we expect next year in terms of major automation trends?
Well, I think the rate of automation is going to accelerate considerably faster than most people realize. And so the early adopters of automation that have brought automation into their organizations last year are going to pull ahead rather substantially ahead of their competitors that haven't. And I think that's going to be broad spectrum. We call it input to outcome, where you take a bunch of documents and you deliver a result. Take a bunch of documents, give you a mortgage. Take a bunch of documents, bring you on as a new life insurance customer. Take a bunch of documents, give you a travel visa, that kind of thing.
So what kind of industries will we see this automation adaptation take hold?
Like I said, it's very broad spectrum. So Hyperscience specifically focuses on insurance, healthcare, finance, government, BPOs, logistics, retail, energy. But that doesn't mean that there aren't other major verticals in which we could be successful. And I think the same is true for many automation companies. It's a very broad spectrum kind of phenomenon that is going to go both very wide across industries, but also pretty deep within each industry.
Are there any barriers that might hinder automation adoption in 2021?
We're always gated by what technology allows us to do. We always want to do more, and all of us are pushing as hard as we can against the limit of what's possible today. And every quarter, that limit, recedes farther out, and so more and more becomes possible. But there's certainly things that we can't do. You're not going to see automation do any kind of particularly creative work next year, I don't think. But for things that are mundane and repetitive in nature, the kinds of things that people generally don't enjoy doing, I think that's where you're going to see a ton of automation.
So Peter, if I may add an extra question here, when we think about things people don't like doing, so when you think like back office work and a lot of operations that can be consolidated to become more efficient, are those the kinds of areas that you're talking about automation?
That's exactly right. That's exactly right. It's someone reviewing a carefully handwritten, manuscript that looks like it's the Declaration of Independence. In fact, it's, someone dealing with a major event in their lives, like the death of a spouse, and they're trying to get access to their wealth management account. Those kinds of things that are typically done by hand and are constantly error-prone and slow, exactly when people need service the most. Those are the kinds of things that we're focused on automating.
And that incorporates a lot of the newer technologies. I would imagine some AI and machine learning is in there to help identify some of the keywords. Is that how that works?
It's gone far beyond keywords. It really is at the level of comprehension. And you're absolutely right. We use a lot of deep learning, which, as is the case with other companies that are beginning to see levels of success that were previously unmanageable, we too have benefited tremendously from deep learning.
So would you say that a lot of the automation trends that we saw prior to COVID-19 were accelerated as a result of the pandemic? Because I hear that across the board with everyone that's on the show, that their industries, these trends that we expected 3 to 5 years out, have certainly been accelerated, and it's not appearing that we're going to go back.
I think that's absolutely right. And I don't think we have a different story to tell here. Time has compressed rather dramatically. Things that customers used to tell us before the pandemic that they wanted, end of 21, maybe sometime in 2022, they're now saying, when is the soonest we could possibly have these things? And I don't think that an improvement in the pandemic is going to change that at all. I think the die has been cast.
All right, Peter, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having me.